What's up, everybody? I'm very excited to announce our next guest. He is a Tesla long, Tesla bull. He's a big part of the Tesla community, always sharing his advice, and he's been quite successful for his investment with Tesla. So I'm very excited to get his input and knowledge and advice that he seeks out to share with the community. His name is Dave. You can follow him on Twitter at real_futurist. How's everything going, man?
Hey, it's going great, Jordan. I'm super stoked that you got me on board. A lot of exciting things right now happening in my world and the Tesla bull world. We're all just trying to make it through this pandemic so that we can start enjoying ourselves.
Right, it's been crazy times. I'm very excited to get you on here. Once we scheduled the podcast, people were DMing me, asking me questions that they really wanted to ask you. So I'm really excited to have that platform to share your experience and knowledge to others. So yeah, just give a background on yourself and how you got into the stock market.
All right, absolutely. So I was born in St. Louis, Missouri. Didn't live there long though. As a small child, grew up in Oregon and then moved to California, Central Coast, between San Luis Obispo and Santa Barbara, where I went to high school. I kind of started getting into stocks in high school. My dad was huge into stocks and commodities, and I had an interest in trying to get into what he was into. And he had all these books that he was recommending me. The Way of the Turtles. He had books on commodities. There was one author, Chick Goslin, that I recall he making me read all these books about commodities trading. But I wasn't doing any trading in high school. I was just trying to learn about it so I could be a part of his world. Um, after September 11th, kind of crazy to bring that up in this interview, but after September 11th, I joined the military, and I was in the military for 6 years in the Air Force. Traveled all over the world, Japan, the Middle East, Korea. I was stationed in Idaho and Texas, training in Missouri again, which was kind of funny. I finished my associate's and my bachelor's degree through the Air Force, and then got out of the military and went to grad school at Cal Poly in San Luis Obispo in the College of Architecture, studying city and regional planning, hazard mitigation planning specifically. Went and worked down in Orange County for a while for an engineering firm. Then went through the police academy. Didn't become a cop, but I was trying to become an emergency manager on the civilian side. And then worked in Santa Barbara County for a while. Went to the Naval Postgraduate School to get another graduate degree in security studies. And then came to the Silicon Valley for a job where I work now, doing emergency and disaster management type work. My first really trading or involvement in the stock market was in right before I joined the military. So 2001 was when I got my first brokerage account. And when you had asked me before the interview to kind of think about my history in the market, I realized it's been 20 years that I've been doing this, and that blew my mind. It just flies by. But I opened my first brokerage account in 2001, and then I was in the military as a young troop in Japan when not everyone had their own computer yet. Like new troops, there was like one central computer in the office that a few of us got to use. And I was logging into my brokerage account on that computer and making trades. And I was doing it after hours, setting my trades for the next day because Japan was on a different time from when the market was open. So my first trades were in some robotics firm and Google. I remember when Google IPO'd in like 2002, 2003, I was all on that. And I remember everyone asked me questions like they thought it was a big deal that I was some kid in the stock market. Even like the older guys were like, wow, that's kind of crazy. You're in the market. What kind of moves you're making? And it was weird how just being young and in the market suddenly gave me legitimacy with people. People were asking me questions like, what moves am I making? Like I had some brilliance because I was young and had a brokerage account. But to be perfectly honest, I didn't know shit from Shinola about about stocks or valuing companies, or the emotional intelligence that's required and discipline required of trading. So yeah, I was trading off and on a little bit, made a little bit of money, uh, trading in the early 2000s and mid 2000s. Got out of the military in 2007 to go to grad school, and then had like a little bit of a time period where I didn't have a whole lot of money, and we'll talk a little more about that. But I wasn't trading a whole lot at that point, and then in 2013, I bought my first Tesla shares, and then 2014 came around, and got into some solar stuff. Actually owned a Bitcoin in 2014, which is kind of crazy. I could talk a little bit about that too, a little later in the conversation. And then I got wiped out on some marijuana stocks. Totally wiped out. After I'd like remodeled a house using my VA loan and had a bunch of money from selling that house, all of it gone. So I've got some interesting lessons from that as well. But had like a little period where I wasn't really investing a ton between 2014 and 2018, and then I just saw the Tesla opportunity, and I've been in Tesla, all Tesla, almost entirely 100% Tesla since 2018. So yeah, 20 years of experience in trading and investing, and it's been a wild ride. We'll talk a little bit more about my position now and how it's grown, and specifically with Tesla. But I will say, you had Jason DeBolt on your on your channel. I thought your interview was awesome, by the way, and he's a super inspirational guy for me. And I saw him on your channel and Dave Lee's channel, and he talked about his background. I think it might have been on Dave's channel, kind of some of his history. And there was a ton of parallels that I saw between he and I, which is super validating. His parents didn't have degrees. His mom ended up getting a degree later in life in HR. Just there were so many very interesting parallels. So anyway, I just thought it was kind of cool that you had Jason on and got to hear his story through you and the work that you're doing, and have similar parallels to my story. Anyway, yeah, that's my background. Not so short introduction into how I got in the market, and yeah, that's kind of my world.
Right. And to me, as an investor, people always ask me, what's the most important thing? What should I do? How should I learn? And to me, the easy answer, straightforward answer is experience. And you have that 20 years under your belt. You just see so many things. You experience it, you understand it more. And that's definitely one of the most important things to do as an investor, whether it's more research, you're getting more experience talking to other investors, you're getting more familiar with the terminology, and you've experienced more. Some new investors that haven't really experienced it for themselves can put themselves in a difficult situation. And that's one thing that I want to talk about is for what do you recommend for new investors out there that are kind of in limbo? They're not exactly sure how to get started, and they're looking for guidance or where to learn how to invest.
If someone had asked me that question several weeks ago, I probably wouldn't have started it by saying, in my 20 years of experience, this is what I've learned, because again, I didn't really realize I had that many years experience doing this until I reflected on it, which is kind of crazy. But I think because I've had other people ask me, about getting in the market and what they should be looking out for and how they should, wade through that crazy maze. I've boiled it down to, I think, 8 points. 8 points for me. And the first is that seemingly large losses when you're young will be seen as a relatively cheap education when you get older. For me, that's been for sure the case. I had huge losses seemingly when I was younger. Like when you've got only $2,000 to your name or $5,000 to your name, and you get a 20% hit or a 50% hit or a 100% hit, you kind of think the world's over. And then 10, 20 years down the line, let's say you got $100,000 to your name or $1 million to your name. You look at that and the lessons you learned as the cheapest, bachelor's degree you could have ever gotten. The second lesson or recommendation I have for people getting in is that learning in the market isn't linear. It's not like every day you're growing and learning something new. And this has been true for me for everything I've learned, whether it's, my professional life with work or playing instruments or anything. You learn in fits and starts, and that's okay. You'll learn a lot in a couple, a very short period of time through one or two trades. You'll go for a little while without trading and just seeing the market kind of tangentially. You'll be back in again, thinking you got it cornered, and then you'll learn some other hard lesson or a really good lesson. And it happens in fits and starts, and you'll look back and you'll see the frequency of your learning over time was not linear, but it kind of had peaks and valleys. And that's, I think that's natural. So don't get discouraged by those lulls in your learning experiences. What I think, simply put, for me, how I look for companies to invest in is I buy companies that are shaping what seems to me to be an inevitable future, and a future that I ideally believe in, with super desirable products, inspired leadership, talented employees, and a potentially large total addressable market, or TAM, as they say. That's the way I look for, the companies I invest in, and that's obviously Tesla to a T. I think, in my opinion, especially when you're young, I think it's important to go for growth investing versus value investing. Look for those companies that are just starting out and they're cornering something big. I think looking at Warren Buffett is awesome as a young investor, because I think we all want to attain that kind of success. But I think you got to make large strides when you're young, when you can afford the risk. Hold. I can't say it enough. You see me tweet about it. The skill to be able to hold is foundational to successful investing. All the companies I bought when I was 20 years old, 20 years ago, if I still held those companies, I'd be rich just holding those companies. It didn't have to be a Tesla. So that's, I post on Twitter all the time, the whole hodl and hold. And I think it's really valuable to do that. And I try not to do that. We got the whole Wall Street bets thing going on, and people are like, hold on these movement stocks, these big meme stocks. That's like a battle cry for a movement. My hold recommendation is because I don't want to see investors regret later on not having held. And it takes a ton of discipline. If anyone's curious about the discipline required in holding and some of the academic philosophy behind it, you should go look up the marshmallow experiment. It's kind of interesting, super interesting. Another major recommendation: read science fiction. If you're going to invest in growth, you should read science fiction. I think reading science fiction and writing science fiction, for me, helped me figure out what those inevitable futures might look like, and defined the companies that were moving us in that direction, even in small, iterative ways. Specifically to Tesla, the book by Isaac Asimov, the Foundation series. If you haven't read them, you should totally check those out. I think there's a lot of parallels between Elon Musk and Hari Seldon. So, a little book recommendation for y'all. Yeah, science fiction is huge. And I'll talk a little bit about my exploration between science fiction and Tesla. Another recommendation, and I think it goes along with the whole hold, hold on for dear life philosophy. I follow the Andrew Carnegie saying. Andrew Carnegie was one of the most successful American investors of all time, adjusted for inflation, rate of inflation. The guy was super, 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 super rich. He said, "Put all your eggs in one basket and watch it like a hawk." And there's a lot of investors that follow that, and I think the most successful investors do. The people I look up to: Peter Lynch, Warren Buffett, Mark Cuban, uh, Carnegie, Musk, Chamath, all these guys. They find the winners, own the winners, know the winners, and stick with them. And then, I think if you do all of the above, all those things I listed, it'll give you conviction. And I think conviction, and Jason talked about this on your interview with him, conviction is the key, I think, to successful holding and long-term investing success. I mentioned that I owned Bitcoin, but I didn't hold Bitcoin. I owned Dogecoin, but I didn't hold Dogecoin. I owned Google. I owned a bunch of companies, but I didn't hold them because I didn't have conviction. And you got to have conviction to be able to hold. And I think to get conviction, you have to believe in the future that the company's creating. You got to understand the products. You got to understand the business. You have to, for me, finding a community of like-minded people to bounce ideas off of, to bolster, my conviction is super helpful. Jordan's one of those folks. He's on Twitter helping the cause, part of the Tesla PR team. And the last thing I'll say, I think my last point, my eighth point, is that everything adds value. Everything you do adds value. I was in the military, and learned lessons from the military that have carried through into investing. I've written science fiction novels and learned things about Moore's law and Wright's law because I was researching for the science fiction novel I was writing that helped me understand Tesla. Going to grad school for city planning and understanding transportation planning and carbon footprint concepts. That has helped my investing. Going through the Naval Postgraduate School and learning about security studies and energy resilience and concepts of fragile energy ecosystems and how that exposes us to threat. All that stuff, everything. Going through the police academy, getting my pilot's license, going through sailing training, all of it adds value. So don't ever think that whatever you're doing won't help inform your success in trading or investing or really in anything in life. So those are my 8 recommendations for new people coming into the market and looking to try to be successful in investing. Long-winded, but hopefully those are useful.
Very useful, man. I'm so excited that you touched upon on so many good points and details and went into depth. I truly can't wait to post this already, this podcast. It's going to be so helpful. It's going to be so helpful for everyone out there. The points that you touched upon, you talk about failures. You learn so much from your failures in life. That's how you progress as a person. Just look at SpaceX on what they're doing with the Starship. They're learning so many things so rapidly. You just see the video of a Starship, bursting up in flames, and Elon Musk tweeting that he's so happy, he's so thrilled. He got all the data that they needed. And that's how SpaceX is learning and growing so fast. And, that's how we learn as humans. We stub our toe, we fail. And the important thing is to learn your mistakes when you fail so you don't make them again. Yeah, I'm super stoked that you went into detail. So many useful points that you brought. Yeah, so let's dive into your Tesla experience as an investor, how you got started, and what strategies and options you used.
Okay, so I'm going to go into some deep detail here because, like you, I was getting a lot of DMs about my option strategies, and some people were like, "What even is options? Can you explain that to me?" So I'm going to start kind of with the history of how I got into Tesla, and then I'll talk about my positions and kind of my more advanced strategies that I'm using now. Interestingly, my history with Tesla started in 2008 or 2009 when I was going to I just gotten out of the military. I was going to grad school at Cal Poly, and I was sleeping in the back of my truck. I was trying to save every dollar I had. I was going to school on the GI Bill, and I had a parking pass for campus. So I parked overnight on campus, had a camper shell on my little single cab manual transmission Toyota Tacoma, and I had a mattress in the back. I'd sleep on campus. I'd shower at the campus gym, and I'd eat, on campus or right near campus in San Luis Obispo. And I was trying to save, as much money as I could while I was going to school. And we were learning about, transportation planning and the environmental planning. Course I think I was in like a land use law class, and I had been commuting for a little while, and I wasn't telling everyone in my class that I was sleeping in the back of my truck. And I said something along the lines of like, I think I might have been bragging, and I was much younger. This was, 14 years ago. I might have been bragging like, oh, I don't even live in an apartment. My carbon footprint's pretty small. And this girl in the class said, yeah, but you're commuting and driving every day, like so many miles. And I was a little frustrated by that, like, critique. Like, look, I'm trying my best here to like reduce my carbon footprint. But I was like, all right, well, let me see if I can figure out a way to like reduce it even further. So I started looking for, vehicles. I just started like researching vehicles that were energy efficient. I would look at Priuses and all this other stuff. And I stumbled on this company called Aptera, which they're kind of making a resurgence right now. Some folks that are like deep in the Tesla sphere might be seeing stuff about Aptera again, because it looks like they're going to get to use the supercharger network. But they were this little company that was building an electric vehicle that looked like an aircraft cockpit without the wings. And it was like a 3-wheeled vehicle. And they had this really long kind of back, like teardrop back end. And it looked kind of like a truck bed to me. And I was like, oh, I could sleep in the back of that. And the thing gets like 500 miles range. I could drive that thing wherever. And then, I'd be reducing my carbon footprint. But, they were just taking reservations, and they weren't like mainstream or anything yet. But the more I researched Aptera, the more I started going down the rabbit hole of electric vehicles. And then I stumbled on Tesla. And I was just kind of stoked on their whole mission, everything they were trying to do, interested in Elon Musk's background, even though at that time, in 2007, 2008, Elon Musk was hardly a major mover yet in that capacity. Like, not a lot of people really knew who he was yet. So it was kind of interesting. But yeah, so in 2011, I started writing this science fiction novel about, it was like before Google Glass came out and before Neuralink was ever like a thing. It was about like this set, these kids building these glasses that allowed you to think, to send text messages and videos wherever you want and access the internet. And exploring that concept forced me to think about batteries and how you power something like that. And the rate of innovation for communications devices. And I started learning about Moore's law and Wright's law, and I was even writing about them in my novels. And I wrote about Tesla in my novels, just like anecdotally, like one of the characters was driving a Tesla, because for me at the time, I imagined a future where Teslas were just like ubiquitous and everyone was driving them. So I had this one character in my novel who had a Tesla Model S and lived in Palo Alto, or Los Altos Hills or something. But so that was in 2011, and I was writing these books, and it forced me down the rabbit hole of learning about technological advance and rate of innovation and exponential, technological curves and S curves, adoption curves and stuff. And then suddenly, in 2013, I saw, I don't know, if that's when, I don't think that's when Tesla IPO'd. I think they IPO'd earlier than that, but in 2013, something about Tesla came up. I don't know if that's when they won the Car of the Year award or something, but that was when I first jumped into Tesla, and it was pre-split. Like I bought 100 shares pre-split between $38 and $43 a share. Post-split, that's $8 a share, so pretty cheap. And so that was like I invested like $3,000. I had like $3,000, and I was like, I'm going all in with my $3,000, and it did really well. It like jumped up to $109 or something like that. And I was selling my house and needed to pay off some credit cards that I'd used to get some landscaping done on my house that I had remodeled. And I sold my Tesla stock and made like $9,000 or $10,000 in profit. And I didn't have a valuation model on Tesla. I didn't know where it was going. I didn't know how big the business could be. I just thought to myself, electric vehicles are the future. Everyone's going to own them, and I want to own a piece of that company, and I'm excited about it. And that was how I was investing. But I made good money. And then I think in 2014, right after I sold my Tesla and thought I was just like a whiz investor. I thought I was like God's gift to investing at that point. I was like, I just tripled my money, baby. What's up? So then I was like, all right, I'm going to start buying, solar, because solar is going to be big. And I bought Bitcoin when it was under $3,000. I think it was like $1,400 a Bitcoin. And I was buying marijuana stocks because at that time it was like, oh, marijuana is going to be a big deal. And I bought this. I suddenly was like going heavy into these marijuana stocks, and I went to this company that seemed like it was legit, and it was kind of a penny stock. It totally wasn't legit. The market froze them, so they were like, they were frozen, and you couldn't trade them for 10 days. I ended up getting like 10% of my overall capital out. I was totally wiped out by that event. And I was planning on buying a house. I'd like back out of buying a house because I lost all my capital in that event. Yeah, so that was at the time a really hard lesson. So I went from 2014 to 2018 with this kind of scar, a little bit of a bruise, and a bit of a fear to jump back in the market. Because I was like, oh man, the market's going to get you eventually. It's going to get you. And I think in hindsight, it's because I was looking at it like gambling. Like, yeah, you can be on the table on a heater playing blackjack for a while, but it's going to get you at some point. Well, that's because you're gambling. And fortunately, that little 4-year period between 2014 and 2018 was also a period for Tesla where it was just kind of stagnating. And it wasn't doing a whole lot. The stock was just, in hindsight now, I recognize it was coiling. It had jumped a ton because it was showing promise, and then it was growing into its valuation, and then it grew way past its valuation. At one point, it was valued so low that I thought to myself, shoot, just the factory properties alone that they have are worth as much as the value in the stock right now. No one's valuing any growth in this company right now. And then the whole 420 tweet thing happened. And I don't know, I think the pedo tweet and the SEC investigation stuff on the 420 tweet, all was happening. And it was like crushing the stock. And I was thinking to myself, man, this company is obviously the future. And everyone's just getting upset because Elon Musk did some like audacious stuff, but that doesn't change anything about the company. And then I started realizing what FUD was. And for those that don't know, FUD is fear, uncertainty, and doubt. And it's the people that spread that fear, uncertainty, and doubt about a stock to watch it go down so they can make money on the downside. And I was just watching it. I was seeing it happen, and I recognized all of a sudden, holy smokes, this is an opportunity. So I I went all in. I was like, I got to have every piece of this company I can get. And I invested, I don't know, 30 grand, I think, when Tesla was at a low in 2018 of like 255 or $245 pre-split, $51 now post-split. And I was nearly all in. And I was telling my wife, I think we were just about to get married, and we were like putting all our money into the wedding. And I was like, I got to invest in Tesla. I got to do this. Whatever, I got whatever money we don't spend on the wedding, we got to put into Tesla. And she was like a really good sport about it, a super good sport about it. She was like, well, all right, like we're in the Silicon Valley, and she was seeing Teslas everywhere. So she was like, this company's not going away. Sure, whatever. And to this day, I can't believe she had so much faith in me. But she was like, yeah, let's do it. So I was like, all right, cool. And that's when I started like really getting into Tesla YouTube. I was doing all of my research on Tesla YouTube. I was getting an education on YouTube through people like yourself who saw the value. Galley was out there doing the damn thing. And I was watching every video he made, every single one. And I recognized the power of YouTube as a research mechanism. And I was commenting on all the videos. I was reading the blogs, Electrek, and whatever else. And yeah, I was like all in. And I thought for sure, as I started doing research, I was like, oh, this company is about to be profitable. Now I'm like, now's the time. Elon has managed to create this opportunity for me to get in super cheap with all of his shenanigans because it forced the company down, and I was able to get in. And I saw, because Galley was talking about it, everyone was talking about it at the end of 2018, that third and fourth quarter, going into third quarter earnings, they're like, yeah, they're going to be profitable. Sure enough, they were. The stock jumped. I want to say it jumped up to like $350 a share. And I thought, all right, here it is, to the moon. Here we go. And then the 2019 quarter one doldrums happened. The Model Y launch, the super terrible production and delivery report that drove the stock through the floor. And I kept like kind of diving in and out of the stock. I was always holding some, but I kept diving in and out because I hadn't learned the lessons of holding yet fully. I started having conviction in the business and the company. I knew where it was going. I'd seen the valuation models that Galley was putting out there, and all the other the YouTube folks. And then my wife told me, she said, when I would kick myself from one day to the next, like, oh, I jumped out a little too early and got in a little too late or whatever it would be. She said, David, just hold it. Just hold it, man. It's going to be a stronger company in the long run. I mean, I don't know where my wife went to investing school, but out of nowhere, she was like, stop stressing yourself out every day. Just buy it, hold it, and leave it alone. Like, just forget about it. Probably the best advice my wife could have ever given me, because that's what I started to do. And as I was doing that, I was seeing the value of doing that. And then I started watching the YouTube channels, listening to people saying like, hey, this is what we call a bargain. Keep buying, keep adding your position. And I did. So much so that when it dropped to its, I think, May 2019 low of $178 a share, I was buying like crazy. I was buying at 190. I think when it hit 190 or 185, I posted on Facebook the ARK Invest $4,000 model. And I put it out everywhere. Like, look, people, this is a huge opportunity. Invest in this company. And everyone was posting on my Facebook, post, get out, dude. This company's going down. There's no way. This ARK model is ridiculous. You could, in fact, if you were to like friend me on Facebook and you went back to May, end of May of 2019, you'd see that post and all the comments underneath it of people just in total doubt, in total doubt. I still go back to that post like once a year and like remind people like, hey, I told you. I try to do it, you know, with good humor. But yeah, I was buying at 178. And a really sad lesson for me was I was talking to my dad about technicals because he likes watching the technical side of stock movement and he's pretty good at it. And he was like, yeah, I think it's going to get down to 180. Anything below 180, you should buy. And he said, I think I'm going to buy if it gets below 180. And my dad had just retired and, you know, they don't have a whole lot of money. And my brother, he was like buying at that point. And my dad thought, once it got down below 180, I called him and said, today's the day, you got to buy. And he said, I think it might go a little lower. Well, that day it dipped down to like 176 and then started shooting up. The next day it was up at 185 or 190 and it's never looked back. And he was going to invest $50,000 in Tesla when it got below 180 and he never did. And to this day, I try not to give him, you know, too much grief about it. You know, he's in a different place. Retirees are in a different place where they got to be a little more concerned and safe with their money. But, you know, that would have set them up for to be much more comfortable in their retirement. So kind of a sad moment for me in that regard that I wasn't persuasive enough to get him to dive in. But anyway, at that point, I think I'd invested about $55,000 in Tesla. And then it started steadily rising into the second half of 2019. And I kept adding. And fortunately, I had a decent job that was paying me pretty well here in the Valley. And I got to the point where I had invested maybe $85,000 of my own money into Tesla by the second half of 2019. And my wife started seeing the rise all the way up into the, I don't know, 300s maybe, high 300s. And she started giving me some of her money. And I was definitely like not encouraging her to do so. She kept saying like, oh, should I give you money to invest? And I'd be like, that's totally up to you, baby. That's your choice. And eventually she was like, yeah, I'm going to. And she'd write me a $5,000 check or a $10,000 check and I would invest it. And she started adding to the pile. She started getting conviction. She started hearing the videos that I was watching and she was starting to dive in too. By the end of 2019, I think we had about $120,000 of our own money invested. And that's right when the Cybertruck launch happened, late November 2019. That's when I got back onto Twitter. I started my original Twitter account, my Real Futurist Twitter account in 2013 to pump my novels that I was writing, but I never ended up publishing because they were science fiction and I was going to be like this science fiction guy who had a presence on Twitter accordingly. But I kind of took that break off of Twitter in 2014 after, you know, stocks and a bunch of other stuff. And then when Cybertruck launch happened, I jumped back on Twitter. And the first thing I did on Twitter was DM accidentally. I didn't even remember how to use Twitter. I was trying to post to Galley something like rally the troops, exciting cry about the Cybertruck launch. And I accidentally DM'd Galley instead of posting to him some picture of some like military space vehicle. And that was my first like entrance back into the Twitter sphere, Tesla's Twitter sphere. Cybertruck reveal happened. I had to have one. I reserved my Cybertruck like in the first 5 minutes of the launch. So now I'm like in the first 20,000 reservation holders for a tri-motor, full FSD Cybertruck that I cannot wait to get. So yeah, then right after, basically from the Cybertruck launch on, all the way into February of 2020, the boom happened. It went all the way up to $968 a share pre-split last February. And that's when the pandemic was just starting. And I remember thinking to myself that a recession could be getting ready to happen. And I remember like struggling, like, man, I've got a huge gain in Tesla. I've got like $250,000 right now in Tesla. This is more money than I've ever seen in my bank account. Maybe I should get out now because this pandemic's going to create a recession. But for the last like 4 months before that, I had been seeing on YouTube all these people saying that we were in the longest bull run in history. So like we were in 11, 12-year bull run, and that had never happened. Most bull runs only last, 8 to 10 years before a pullback, and we hadn't seen one. So I kept thinking about my thesis about Tesla in relation to a potential pullback, a recession. So I kept thinking about that, and I kept thinking to myself, I think Tesla's going to be more successful if we have a recession because it's got such a small market share. If that market share continues to grow even a little bit, then they're not going to lose any sales, whereas the big car companies, they're going to lose a ton of sales. I just built my whole, I've got like a notes pad about all this stuff about how I thought Tesla would be successful in a downturn. I was like commenting on Stephen Mark Ryan's and Galley's channels about like, hey, you guys should do a post about what happens if there's a recession with Tesla. So when the pandemic was hitting and we were peaking at $960 a share, I had like a come to Jesus moment where I was like, wait a minute, no, I've built my valuation model and my conviction to know that if there is a recession, any pullback will be temporary, and probably it's going to be like adding fuel to the fire for Tesla. It's going to make them stronger and faster and better. It's going to be an opportunity. Kind of like how the Great Depression was for Ford, and how during the Great Depression, Ford took off and the new technology of the automobile totally crushed the horse and buggy because people were looking for cost efficiencies and ways to do business better. I thought the same thing was going to happen. So I didn't sell. I held on to every single one of my shares, and it collapsed, as you know, like 60%. And I bought a bunch of extra shares on margin. I was like, when it got down real low, I think under $400, I was buying shares on margin. I think at that point, before I bought the shares on margin, I had like 370 shares, and then there's pre-split. And then I got up to 500 shares. I always wanted to own 500 shares. So I got my 500 shares on margin, and I was like, I'm just going to pay these off over time. And as Jason DeBolt mentioned, there's interest. You got to pay annual interest on margin. I think mine was like 9% through TD Ameritrade. And I was like, oh man, I've got like a year or a year and a half of like margin I'm gonna have to pay off slowly over time. And I didn't really know about options or anything at that time, or I was kind of too scared to dabble in them. I'd only heard horror stories. But my wife was on board. I told her what I was going to do. I said, we're going to have to pay this off over the course of the next year and a half. But we're going to have way more shares, and the stock's only going to go up over time. And at this point, we both had conviction. So we went for it. I was, as it rose back up again and recovered, I closed out some of my margin shares to try to reduce my margin load. And I did. I got to the point where I only had like 30 grand on margin. But then we got to the, let's see, it was June. It was the end of June this last year, 2019. Nope, 2020. This last year, June 2020. And I could see that the production and deliveries report was getting ready to come out. I was looking at all of the, James Stevenson, Troy Teslike, Matt Smith, Galley, Rob Maurer. I was looking at all of their prediction models on the deliveries and production. And I knew that if they were profitable, they were going to be eligible for the S&P 500. And I also knew that the street was totally underselling the production and deliveries. And I was like, holy smokes, this is where the community, the Twitter community, was such a major boom. I was so convicted. I put on Twitter, I was like, I'm gonna get 100 shares or maybe $100,000 on margin right now to buy stock. I was like, I'm convicted. I'm going to do it. I'm going to hold. You all are going to watch this. It's going to happen. You can go back and see those tweets from the end of June, first couple of days of July before they released the production and deliveries report. And I had people DMing me, dude, you should just buy calls. You should just buy calls. I didn't know anything about options. I was like, I'm not comfortable with that. I don't have conviction in that. I'm going to do what I know and just buy shares. It'll be on margin, but it's okay. I know they're going to go up. Sure enough, the production and deliveries report came out the first couple of days of July, and it was a blowout. Tesla kicked ass. And then I knew my plan was, I'm just going to hold these margin shares until the earnings report. Well, as we got closer and closer to the earnings report, the stock kept going up. And I had bought those shares at, I think, $900 a share pre-split. So it was like $100,000 of margin. And that was my big margin gamble. And I full on gamble because it could have gone wrong, but I had conviction and I thought, I knew what I was getting into. So then they went into the earnings report and I held it through the earnings report and they blew the earnings report out of the water. And I was like, they're going to get added to the S&P. Then all the S&P speculation started happening and it jumped. And then they didn't get added to the S&P, but I was still convicted. And then there was this little bit of a lull right between that earnings report and when they announced the split, the stock split, the 5-to-1 stock split, and then when the S&P announcement happened. And that lull was like, July through August. It was like a 1-month period there. And I got to give a shout out to my boy Sid, who is at PSIDART. It's like P Sid. It's like Siddhartha is his name. At PSIDART. His handle is wannabe_futurist, which is kind of funny because I'm real futurist. That was not planned. He hit me up in the DMs, and he was like, dude, we got to check out this options thing. I think we're leaving money on the table. He said, I think I've come up with a strategy that might be a safe way for us to go. And I think we should have a video chat, a FaceTime chat, and talk about it. So I was like, all right, brother, let's do it. So we chatted and we came up with this little strategy. First, we educated ourselves on options. And for those of you that don't know what options are, real simple breakdown. Options are basically a contract to either buy or sell shares at a future date at a certain price. Now, that contract has value. If it moves closer to looking like you might be right, the value of that contract is going to go up. So there's two ways to make money. There's two sides of making money on options. One is on the value of the contract increasing, and the other is on taking execution of the shares. But there's two ways to play the options game. You can either sell options or you can buy options. This is my recommendation. Do whatever you want. Do your own research. All the the disclaimers. My perspective is that buying options is gambling, for sure. It's like sitting down at the card table and you're betting that you're going to hit 21 or whatever it is. But selling options is like being the casino. My recommendation is where you can always be the casino. And I'm going to explain how that works right now. So our strategy, when Sid and I talked, our strategy was going to be that we were going to sell options. And when you sell options, you make premium. And the basics on that are, you basically say, I'm willing to put the shares that I own I own the underlying asset. I own the shares. I'm going to put those on the table and say that if the stock hits this price over here, then someone else can take those shares at that price. They can buy them from me at that price. But in order for me to make that promise that I'm going to sell them to you at that price, you've got to pay me basically a contract fee. So let's just say that I own something at $10, a share of some, 100 shares of some stock at $10, and I promise you that I'll sell them to you when they get to $100 a share. You're going to buy them from me at $100 a share. But for me to write that contract with you, it's going to cost you, I don't know, let's say $50. I get to keep that $50 no matter what. So if you buy my shares at $100 a share, I get that profit plus the $50 you gave me. You get the peace of mind of knowing that you for sure get to lock in that price of $100 at that date. So if the stock goes up to $150 by that date, you still get to buy the stock at $100. And you only had to pay $50 to make that deal. So, so our strategy, Sid and I, my hat's off to him. He did this really cool thing where he basically measured the most amount that the stock has ever gone up in 1 week. And he went back through like weeks and weeks and weeks, months and months, even years of investing or of Tesla trading, and saw that the stock had never gone up more than 20% in 1 week. From Monday opening to Friday close. So we said, if we just sell our options, we sell covered calls. And covered calls means if you got 100 shares, you can sell one contract, one call option, and you can get the premium for that. So for me at the time, I owned post-split 3,000 shares. So I could sell 30 contracts. So we said if we sold just 20% out of the money, if we basically said, if the stock's at $100 a share and we sold contracts at $120, that basically meaning that if the stock hits $120, we have to sell, we're obligated to sell our shares at that price to whoever owns that contract if they want them, then we probably would be fine because the stock never moves more than that. So let's just set it at 21%. We'll put the strike price at 21%, and the stock has got basically based on history and some of the most volatile trading in Tesla we've seen this whole last year, we're almost certainly not going to get executed, and we're just going to be able to collect all that premium money and use that premium money to buy more shares. So we dabbled first. I just started with one contract. I was like, I don't know, let's see how this goes. I tried one contract. I put it at 30% out of the money, meaning 30% away from the current price of the stock. And I did it just for a week. So the contract was going to expire on Friday. And you can do contracts that expire 2 weeks out, 1 month out, 2 years out. But the further out you go, the less certainty you have about the stock movement and the less confidence you might have, less conviction. So I sold 1 week out, 30-something% out of the money, one contract. And I think I made, I don't know, might have been like $50 or $30, $40 on that contract just to put my toe in the water. And Sid did the same thing. I think he had like 500 shares or something. I don't know. He did the same thing. We were in it together. We were like, we're going to do this together. We're going to hold hands through this thing, and we're going to talk our way through it and analyze our strategy when we get done. And it worked. The stock didn't even come close to hitting that share price. It went up like maybe 5%. And then the contract expired worthless, and I got to keep all the premium money. Didn't have to get rid of my shares. I did the same thing the next week, but this time I did it with 5 contracts. Well, the next week, the stock went down instead of going up. So in 2 days, when the stock went down, the value of that contract reduced. So I was able to go back and buy the contract that I had just sold at a much lower price. And suddenly within 2 days, I basically got 75% of my profit on that premium that I was given. And I got to keep that money. And then I went out and bought like 2 more Tesla shares with my earnings on that. I was like, holy smokes, this is awesome. And we were super careful. We reminded ourselves that this is just extra money we weren't going to have anyways. So don't get greedy. Let's just take it slowly. Well, within a few weeks, I was basically selling covered calls, my whole lot of shares. I had 3,000 shares. At that point, I think I had like 3,033 shares. But you can only sell contracts in lots of 100 shares. So 30 shares it was, or 30 contracts it was. I was selling them 30% out of the money. And I was making like $2,000, $3,000, $4,000 a week just selling these. Basically, I was making over $100,000 a year just selling these weekly covered calls, and the stock price never got anywhere close to that, to those strike prices. And then we kind of recognized we could do the same thing on the put side. So we could go down and say, hey, we'll sell puts on the other side of the stock, also 30, 40% out of the money, because it's not likely the stock's going to drop 30 or 40% in 1 week. And we'll make premium on the puts as well. So we were making money on both sides of the deal. We were making, I was making, between $2,000 and $4,000, $5,000 a week doing this. And Sid was making good money too. So we did that for like a pretty good amount of time. And again, we felt like we were being the casino. We were taking on almost no risk and making a ton of money and adding and building our position. So when you sell calls and puts like that, way out of the money, it's a strategy called a short strangle, which, by the way, I love the name, especially being a Tesla long. We were pulling off a short strangle, which was great. So the thing that gave us concern about that was going into this huge period of uncertainty. That was in like July and early August. And then the split announcement happened. Well, Sid and I were talking about our strategy, and we were like, what happens if a short squeeze happens? And you may remember all sorts of stuff on Twitter about a short squeeze happening. We were like, man, we could be called out of our stock and miss that huge move. We don't want to take that risk. So we basically stepped away from selling options, weekly option contracts throughout the entire split run and the S&P run because there was way too much uncertainty. We couldn't trust the model that we had developed, that 20% out of the money move model, because we didn't know how far this thing could run on any given day or week with a potential short squeeze. So we basically let it run. While we were letting it run, that huge, giant, sudden, uncoiled run that happened, that tends to happen every 2 or 3 years in Tesla, increased the implied volatility, the IV on the stock. So with options, there's things called Greeks, specifically that volatility when it's, let me take a step back here. There's one Greek called a theta. I'm not going to get into the philosophy of all this, but time decay. Over time, the value of options contracts decreases based on time decay, and that's called theta. That's going to be important here in just a second. So this huge run up in Tesla stock created a ton of implied volatility. Implied volatility increases the value of options, the premiums. It costs more to buy options when the implied volatility is really high, because the likelihood of it moving more is much greater. So what I saw is this huge opportunity being created where the implied volatility was going to be temporarily extremely high because of this giant run up, because of these two kind of manufactured events, the S&P and the split. And I thought to myself, well, how do I take advantage of that? And me and Sid talked about our strategy, and we looked at selling calls at the weekly level, but the implied volatility, you couldn't really take advantage of it at the weekly level. So we looked at it at the long term. We looked at 1 year out and 2 year out covered calls. And the premium you could get was astounding. At selling January 2023 covered calls at $1,700 a share, which is what you can do right now, within the last week or two, was with 3,000 shares, I could get like $1 million in premium. $1 million. That's crazy. So I was looking at that like, this has got to be too good to be true. This is crazy, right? And I had another one of those come to Jesus moments where I was like, am I going to take advantage of this opportunity right now? And, I've got millions of dollars in Tesla. What am I trying to accomplish here? And I thought to myself, I'm trying to accomplish independence and freedom and getting out of the whole having to exchange time for money situation that we're all in. Most of us are in, having to work. I thought, I think it's time for me to make a pretty bold move. So I executed a massive short strangle using what's called leaps, selling covered calls or buying calls years out. It's called a leap strategy. So I executed a leap short strangle. So I sold 30 contracts of covered calls for January 2023 at $1,700 a share. I also sold 30 put contracts at $420 a share and walked away with nearly $1 million in premium. So what that means is if the stock goes down to $420 a share, I've got to buy 3,000 shares. That's going to be like $1 million. A lot of that's going to be on margin, but I could just turn around and sell covered calls on those shares that I have to buy. And as it's going down, I'll make money on all the covered calls, because the further down the price goes, the more those contract values decrease. So I can just buy all those back and I basically make all that as profit. If it goes up and continues to go up and hits $1,700 a share in the next 22, 23 months, then I have to sell all my shares at $1,700 a share, and I'll be a, 4, 5, 6 millionaire on top of my pension from work. And I don't even necessarily have to do that. I'll mention that here in just a second. But I have to sell all those shares plus all those puts that I sold. They will have become basically entirely worthless. So I can close all those contracts out. And that's basically $1 million of free money. So when I sold the 30 covered calls and the puts, I had like $1 million in cash. Well, I'm not gonna just sit on $1 million in cash, right? Well, I bought a bunch more shares of Tesla stock. So I took my 3,000 shares up to 3,500 shares. Any discerning person right now that's listening is thinking to themselves, wait a minute, $1 million would have bought more than 500 shares of Tesla stock. He should be sitting on like over 4,000 shares. Well, I've got some big changes coming up in my life, and as I mentioned, we all are trying to get out of this this bartering system of time for money. So I've got a little money sitting on the side that, should I choose to leave my job, if I wanted to, I'd have enough money to live for several years without having to worry about making any money. But I bought an extra 500 shares of Tesla. And then guess what I did with that? I sold another 5 contracts of covered calls on top of that to get some additional premium, and keep that on the side for like dry powder. And actually, I sell like just small weekly contracts with that. But some people who are on Twitter and know me, they're thinking to themselves probably right now, dude, $1,700 a share, Tesla's going to hit that for sure. That's like you're basically shorting the company at $1,700 a share within the next 2 years. Could be. Here's my philosophy on that, or my theory on that. The S&P and the split caused a massive run-up and a massive run-up in implied volatility and a huge increase in value on these leaps. If the stock does nothing, doesn't go down or go up, just stays at its same price in like a little consolidation period, even for a few months, the implied volatility is going to contract tremendously. And I'm going to make money on both the calls and the puts that I sold, because the value of those contracts is going to reduce tremendously because the volatility will continue to contract, and I'll be able to close all those positions for a massive profit, all because we had this massive kind of manufactured run up due to the S&P and the split. So my prediction, based on a number of things, the reason why I feel safe at this $1,700 ceiling is four predominant reasons. I'm almost all done here on this deep dive. I know this has been quite the dive, but there's a lot going on here. There's 4 reasons why I feel really safe on this. The first is, my perspective on Tesla is people are only willing to buy so much unrealized growth potential. And with Tesla, there is a ton of unrealized growth potential. If you listen to Warren Redlick, he's got like a $300,000 price target on Tesla. So there's a lot of unrealized growth potential. But people are only willing to buy so much of that. I think people saw years ago the growth potential on Amazon, but they weren't willing to pay as much as they're willing to pay now because it hadn't demonstrated that it was going to execute on all that potential growth. Tesla has big catalysts, huge catalysts coming up. Software as a service revenues, full self-driving, robo-taxi, all this amazing stuff that's on the horizon. But the reality is, a lot of that stuff probably isn't going to be coming to fruition and generating massive revenues until 2023, 2024. The Austin and Berlin gigafactories, they're going to come online this year, limited production for the first couple quarters, and then next year coming into much larger production. And we're going to see the really big benefits from those factories mid next year, maybe late next year. The full self-driving, you had John from Tesla owner Silicon Valley on your channel. I rode with him just the other day on full self-driving, my first time on full self-driving beta. It's amazing. But on your channel, he even said full autonomy, still a few years out. The robo-taxi business, it's going to be amazing. Tesla's going to corner that market. They've got the market cornered. They're going to own it. But the reality is, there's so much, the March of Nines, the nuance of getting to the point where you can actually launch that business without customers hating you because the cars can't figure out how to drop you off on a dirt road, or all these weird special nuances. It's going to be a few years out. That's my faith that it's going to happen 2023, 2024, 25, 26. That's when we're going to see those huge revenue streams start pouring in. So I think the revenue harvest from those things is still a few years out. Historically, the third reason why I feel safe with this is historically Tesla does this thing. I mentioned it already. It coils. People run the stock price up well over where it's currently valued, and then Tesla fills in on that value and then goes past it. And then all of a sudden, something happens, whether it's an earnings report, a production or deliveries report, or something. People recognize, oh, holy smokes, it's way undervalued. And then it shoots off like a rubber band again and gets way overvalued. It's already done it 2 or 3 times in the past. And I can see the way the catalysts are lining up that it's getting ready to do it again. I suspect we're gonna be in a $600 to $900 or $1,000 consolidation period for the next, I don't know, year or two maybe. It could go up more, but I suspect we'll be in a consolidation period, and then it's going to coil up and it's going to shoot off again as soon as they start demonstrating execution on some of this unrealized growth potential. And the last reason why I'm confident is because there's all sorts of options for managing. There's options management strategies. So if suddenly the stock was like running up towards $1,700 and the puts that I sold, I'm making all profit on those, I can close those out, sell puts closer to the current stock price, make a bunch extra money, use that money to buy back some of my calls so that they don't get executed, and then sell calls further out of the money. So there's all sorts of like rollover strategies and things that you can use to make sure you don't get executed or assigned when you're doing an option strategy. And last week on that Clubhouse talk that Elon Musk was on, I stayed on after, and Ross Gerber was on it, and I brought this whole strategy up to him, and he like validated it. He was like, yeah, I'm making so much money doing that exact strategy, tons of money. People have no idea how much money you can make selling call options, covered calls, way out of the money, and just collecting premium to buy more shares to build your position. And if I'm ever gonna debolt, I gotta get more shares, baby. I gotta get more shares. So yeah, that's my my strategy right now. It's awesome. It's working really well. There's a lot of big changes in my life that are coming up because I get to use these premiums to live. And I just have to remember why I'm investing, and it's to allow me to live the life I want to live. And I'm hoping that very soon I'm going to be able to do more of what you're doing and become a greater contributor to the mission and a part of the Tesla PR team in a more dedicated way because of this, because of what I'm doing. So that's the deep dive on the options, on my strategies, on how I'm building my position. Yeah, that was a long dive. What do you think about that?
Yeah, thank you, man. A lot of people on Twitter were actually very interested on what you were doing because they knew you were into options and you had some margin buys and stuff like that. So that was a great in-depth conversation discussion about your analysis. If you guys have any questions, again, follow him on Twitter or drop your questions in the comments below. A lot of good stuff, man. I'm glad that you're already thinking about your next step in life. You know, what are you going to do after, because money can only fulfill you so much, and it's not all about money. And then you already talked about giving back to the community. That's freaking awesome. Great to hear that. Now, stepping away from the actual investing side of Tesla, just from operations or fundamentals aspect, what are a few things that excite you most about the company? And then on the flip side, what do you think they need to work on? Say if you had a discussion with the board of directors, what would you recommend for them to improve upon?
So I think what excites me most right now as a Tesla investor is the unlimited product roadmap. Although it's frustrating as a customer because I want all those products right now. Like I want my Cybertruck right now. I want the Tesla HVAC system right now. I want all that stuff. But as an investor, that product roadmap is like I've imagined products going out 20 years that they could be making. It just seems like they're an unstoppable train at this point in that regard. And also, what really excites me is just the constant, exciting, tech revolutions. Whether it's full self-driving technology, Their batteries, just the astounding, developments in battery technology, the potential for like robots and how they can put their visual, neural net AI recognition software into, manufacturing robots or whatever. The AI and Dojo piece, I think Elon on the last earnings report talked about how Dojo could be its own service business, that it lends that neural net learning service out to other companies. And I was thinking to myself, manufacturing plants that are trying to have robots build things that need to be able to see what they're grabbing and doing, they could like train all that with their Dojo system or their neural net system. There's so many exciting opportunities on the horizon. As far as like what I would tell the board, man, I think obviously focusing on increasing volume to meet demand. My biggest concern is that historically size has equaled stagnation. I'm curious how Tesla's going to stay nimble and how they're going to stay in startup mode as they continue to grow. How do they avoid the same potential pitfalls as their current, antiquated competitors, especially in a world where the rate of change is increasing? How do they continue to stay ahead, and how do they stop from becoming, this big behemoth, bureaucratic behemoth that can't move fast enough? So I would never deign to have some great piece of knowledge or advice for a board, especially a board as successful and talented as Tesla's. But that would be my concern, is how they're going to do that. I think that's going to be a big challenge for them as a board, especially as the board of directors, because I think the board is the least likely to want to be nimble and agile and in startup mode. The board probably wants a little more stability and maturity in the company. So I hope that the board doesn't get in the way of that in any way.
And as far as value in the company, full self-driving has been a big part of the conversation for sure, and the value of the company. And if you could touch on Tesla's progress and what you think of the competition and the whole disruption of full self-driving, how do you think this is going to change the way we transport or own cars?
So I mentioned that I had the opportunity to ride with John, with Tesla owner Silicon Valley, in his Fuad mobile on full self-driving beta just the other day. It's astounding. It is absolutely astounding. He just posted that video, I think, 2 days ago or something like that. It's pretty amazing. I think the potential for full self-driving and the robotaxi business is huge. I think Kathy Wood and her team over at ARK Invest, they've valued the business at $9 trillion potential dollars, the market cap of that entire industry. The automotive industry is only $1 trillion right now. So, kind of the same way Apple did to the cell phone industry. The cell phone industry was like a $300 billion industry. And then Apple came in and, got the whole smartphone thing going and iPhone thing. And, now the cell phone industry is a much larger market cap industry. I think Tesla's going to do the same thing with the auto industry by bringing that autonomy and robotaxi software as a service piece into it. They're absolutely seemingly light years ahead of any of their competition on both sides of the fence, the technology side, the Waymo side, but also on like the Uber side. Like the piece that Uber has, I don't think would be hard for Tesla to create. The piece that Waymo has, Tesla's already created it and is already beating. So I think it's pretty bold, especially having ridden in John's Model X on FSD beta. I think it's pretty bold that they're using, it's testing in the wild. But I think that victory, fortune goes to those that are bold, So my hats off to him, and it was amazing. Absolutely. We must have gone for 20 minutes before a single circumstance gave me pause or question. At one point I forgot that John wasn't driving the damn thing. It was like going around roundabouts, going around debris piles. Vehicles were like stopped on the side of the road to pick up their kids at school. People were walking across roads. Bicyclists were going by. Everything you could imagine. It was like no big deal. There were a few moments where it was a little more aggressive than probably it should have been. Um, like it knew that the pedestrians on the side of the road weren't a concern and would like go right by them. But the pedestrians probably didn't feel as comfortable with a car going by at that rate of speed. Uh, but the technology saw them and recognized it wasn't a threat or a concern. And there was times where maybe it wasn't aggressive enough. Like it won't go into bike lanes to make a right-hand turn. So a driver behind you that's not on full self-driving will like pull into that bike lane to make that right-hand turn. And your car on full self-driving is like waiting to make that right-hand turn. And now it's got like this impedance of another vehicle there next to you. So there's those little nuanced issues, but all that stuff's going to get worked out. Like I've got faith that a lot of that stuff's going to get worked out over the course of this next year with software updates. But anyway, the potential is astounding. I think that Tesla, there was a guy on Twitter, his handle's like VM1 or something like that. I posted a spreadsheet that he had showing all the industries that Tesla is disrupting and had little columns where you could write in what you assume to be the total market cap for each of those industries. And I thought that it would be really good to see two more columns, a column that showed what percent of that industry Tesla was going to take, and then a column showing like how much that industry could potentially grow as a result of Tesla's influence. And if you're looking at like the energy industry, which is $7 trillion, I don't know that Tesla's going to get the lion's share of the energy industry, but it's going to get some of that $7 trillion. Maybe one, maybe two, maybe 3 trillion. Autonomy, though, with Kathy and the ARK Invest team valuing it at 9 trillion, I think Tesla could get not just the lion's share, but maybe 90%. Who knows? They could get 90% of that whole industry. So when you look at, autonomy at 9 trillion, auto industry at 1 trillion, which I think Tesla could definitely get 20 or 30% of, bare minimum. And then you look at, $2 or $3 trillion in energy, and that's not including any other industries that they might be disrupting. I don't see Tesla at its peak being anything less than $3.5 trillion valuation company. Now, whether that's 5 years from now, 10 years from now, or more, time will tell. But I think bare minimum it'll be $3.5 trillion, and I think robotaxi is going to have a big piece of that.
Right, and like you said, ARK, the way they value their companies is based on the market cap of the sectors, and Tesla is in several of them. And if you just give them 20% of each of those markets, it's multi-trillion-dollar company. And that brings us to our next part of the valuation with Tesla is batteries and how efficient they are, the performance, how they're managing the battery in cold weather and stuff like that. So yeah, give a deep dive into batteries and what possible products Tesla can lead into. I know VTOL is a big one of your aspirations. Tesla's currently Tesla's currently, I believe it's slightly above 300 kilowatt per hour. And the magic number that Elon Musk has continued to state is 400. So if you could touch upon batteries and what Tesla's doing on that full front.
Yeah. So I was at Battery Day. I was one of the hyper nerd bulls that was standing right out in front of the Tesla factory in Fremont. That didn't get to go inside, but I got to sit. Big shout out to Coding Mark. He let me sit in his Model 3 and watch the whole presentation, and we could hear the people cheering and honking at the presentation. from the parking lot we were sitting in, watching the presentation. That was a cool event. I actually got to meet all the, Tesla bulls, Eli Burton and Kristen, Kate, K10, Anwar, and all those. Galley from a distance, big wave. All those guys. I met all those folks and got to have a beer with them and chit chat with them, which was awesome. But anyway, Battery Day. It was super astounding to me how it went over the heads of so many people. There were, I think one of the slides from Battery Day showed the footprint reduction of their factories based on all their technological advances. And that alone was like this really cool visual to show how these compounding innovations were gonna reap huge rewards. And I'm an avid fan of the limiting factor. If you guys don't know about limiting factor, check out his YouTube channel. It's really good. It's very science heavy, very science forward. But if you want to know anything about batteries, that dude is the source. Jordan Giesecke, he's super sharp. But I've been watching all his videos leading up to Battery Day, and he was like spot on. But he was making these big, bold predictions and talking about these multiplying effects of all these innovations with the battery. And even his amazing bullish predictions were blown out of the water by the Tesla team. And watching that, I thought to myself, we're even closer to VTOL than Elon's letting on. I think at this point, the biggest hindrance to VTOL is supply, is a volume issue, and also the biggest impact on the mission of Tesla, right? So if Elon's got to make a decision between taking X number of batteries and putting them in VTOL aircraft, or taking X number of batteries and putting them in vehicles, when you look at the mission of transitioning the world to sustainable energy, the bang for your buck is going to be the vehicles every time. But at some point, when they're starting to hit the volume production that they're talking about, 10, 20 million vehicles, you're going to start to think, okay, well, what else are we going to do with our batteries? There's the energy grid for sure, but there's going to be opportunities for other types of vehicles. And I don't know how many times he's mentioned a great desire to work on VTOL. He's even brought up yachts before, which, as a sailor and a pilot, I'm like, yeah, I'll take both. I'll take one of each, please. But yeah, I think the possibility for VTOL is there. I think with the 4680 batteries they've got, they're like right on the cusp. Now it's gonna be a matter of when does it make sense to do that. But kind of like the old saying, from Back to the Future, where we're going, we don't need roads. Having studied city planning and having pilot training, I think to myself about all the things that Tesla is disrupting or changing about our world and how it works. And I think about, imagine owning a piece of property that doesn't have any roads connected to it that you can get to with VTOL. We all live in these super dense pockets. I think you're in Boston, right? Sweet. Pretty dense area there, metropolitan area. Same thing here in Silicon Valley. And we're in these dense pockets because, roads lead us to these places, and there's commerce here, and you can get to stuff. Well, when you can suddenly get to all that stuff without having to live right in it, because transportation is no longer an issue, suddenly you can live in farther flung places, and property that would have been otherwise mostly worthless suddenly becomes, premier places to live. I think VTOL might have some impact on that. I don't think it's going to happen until the 2030s. I think the 2030s will be an interesting time for VTOL to start showing up and making its case, as it were. I'll be interested to see if that's something that Elon is hands-on with, or if he gives that to Tesla to run with while he's busy trying to establish a Mars colony. We'll see. But yeah, like I've got a buddy who works at Tesla, and he helped design the Cybertruck, and I've talked to him, and he talks about how they're very aware of the potential for a trailer with an HVAC system, with solar panels and batteries, and what that could be like and how that could be useful, the utility of that. You start looking at yachts with solar panels and batteries and being able to utilize suddenly that whole ocean without having to be concerned about fuel. You start looking at land that's inaccessible right now that suddenly becomes accessible because of VTOL capability. And then suddenly you start looking at real estate differently. And you start realizing that Tesla isn't necessarily going to disrupt real estate, but certainly is going to change the way we view the world's livable spaces, which, I mean, that blows my mind. That blows my mind. But again, that just speaks to the tremendous opportunity and value and change that that Tesla is bringing to bear. So those are some high-level thoughts. But damn it, I want a VTOL jet. Give me that VTOL, Elon. Let's go.
Yeah, that would be freaking sweet to have in your in your driveway. You can just go whenever you want and get to places much faster. Yeah, we just talked about a bunch of different things that make Tesla so valuable. The whole disruption and the way we change on how we're gonna get transported everywhere. If people are even gonna have cars with FSD. So yeah, with that being said, those are the two biggest, in my opinion, two of the biggest things for the valuation of Teslas: how fast they can scale batteries and full self-driving, how quickly can they do that. So with that being said, what are your future price targets, or when do you plan on selling your shares?
My exit strategy, huh?
Exactly, yeah.
So as I kind of did that deep dive on my option strategy, I recognize there's a chance that I could have some of my shares called away at $1,700 a share, which frankly, that's okay, because I'll take the money that I made, I'll pay my taxes, I'll just jump right back into Tesla, and maybe I will have missed a small piece, but I'm okay with that. The majority of my shares I'll still own and not have to sell, so it's fine either way. But my plan, my strategy is I intend to definitely own at least two-thirds of my current position until Tesla is at $3.5 trillion market share. At which point I would start pulling off 10% of my position, maybe a year, 10% a year over the course of 10 or 15 years. I think, or I would ideally, I'm not going to be selling anything until 2023, not a single share. And then from 2023 to 2025, I will try my damnedest using call options and other measures to not have to sell any shares. But if I have to sell a few shares because they get called away from me at some crazy high valuation, I'm fine with. I mean, so if I were to, right now I've got 3,500 shares. If it hits $1,700 a share, I would be sitting on, I don't know however many millions of dollars, nearly $6 million, plus the money I've got sitting on the side for my premiums, plus my pension. I wouldn't have to do anything after that. But I don't want to miss the Tesla story or the opportunity. So my intent is to try to not have to sell any shares for as long as humanly possible. But I recognize there may be circumstances where I may have to sell 100 shares here or 10% there after 2023. But I'm confident that in the year 2030, I will still have probably the lion's share of my entire position. Anything over $3.5 trillion market cap is gravy. If I had to sell my entire position at $3.5 trillion, I'd throw a big party and you can come, Jordan, for sure. But yeah, I'm happy at $3.5 trillion. And if I have 2/3 of my position and it hits $3.5 trillion, and I've sold off the other third and made a decent amount of money, I will have effectively debolted. I'll be sitting on $12 million. So yeah, that's my exit strategy. Now, my price target, as I mentioned, I think Tesla bare minimum is at $3.5 trillion. I would love to see every single analyst that values Tesla using that chart that VM1 made that shows all the I think it's criminal. It's not criminal. I think it's ridiculous now that chart is made that analysts don't use it, don't address it in their valuation models. I think whether it's, Alex Potter with Piper Jaffray or Adam Jonas, Morgan Stanley, I think every single one of those valuation models should have that spreadsheet, and they should say where they think those industries market caps are currently at, and what percentage Tesla currently has, what they'll likely have, and how those industries will grow going forward. I think $3.5 trillion is a low ball, honestly. That's like my bear case. I think it could be much higher. I don't know if I'm in the Warren Redlick, category of thinking it's going to be $300,000 a share. That'd make me a billionaire. But but I think that 2030 is going to be a big surprise to all of us about how valuable Tesla is. So that's broadly kind of exit strategy, broad strokes, and valuation, broad strokes. But there will be a lot of bumps along the way. Ridden several out now. I'm at the point now I've got so much conviction that I'm not even worried. Kind of like them. They're opportunities, and they just, it's like a workout. It hurts in the short run, but you feel stronger afterwards. I think there's two scenarios for Tesla's valuation growth. The one scenario is the coiling one I mentioned, where every couple of years it coils up and then shoots up, 3x, 4x, 5x. Or from here going forward, maybe there's a linear growth pattern that follows its 50% CAGR, compound annual growth rate. So maybe the stock goes up 50% every year, which, by the way, if it did that, I would still be fine. It would be at $1,600 a share come January 2023, and I'd be sitting pretty because I'd be able to sell options again at an amazing price, and I will not have lost any shares. But if that happens, with 50% compound annual growth of the stock at 2020, 2030, it's going to be several trillion dollars. I don't know if the stock valuation can continue to grow at the same rate as the CAGR for the production and deliveries, but if they keep adding new revenue streams, new business, pieces, bolt-ons to the company, I don't know. We'll see. So that's the two ways I see it happening. That's where I see it landing, kind of my broad strokes of my exit strategy.
Right, and Tesla's a very unique situation where they're disrupting so many things. It's tough to value them. Even with ARK Invest, the biggest bulls on Wall Street, they had a ridiculous price target of 4,000 on Wall Street, which was ridiculous. And they're pretty spot on. It's currently trading around $4,300, I believe, post split. And it just seems like the analysts are still trying to catch up with price targets. They're still missing so many different parts of the business. And now quickly shifting away from Tesla for a little bit, another hypothetical question. Say they went private, or the company went bankrupt for whatever reason. What other investment opportunities do you have your eyes on or interest you?
That's tough. Like I said, I'm kind of kind of a one stock man. I like to own one business because I like to imagine myself as an owner of that business, and I really focus on that business. But you know, if I'm imagining a future uh, that I want to live in, and in areas that are ripe for disruption, I think Square. I think the company Square is really interesting to me. I mean, I think the fact that there's like a term now for like financial disruption. I think it's like FIDI or something like that. Um, is worrisome because I think that means there's like a lot of companies are getting into that space. But I think Square has got a whole wraparound uh, for their ecosystem on the whole financial sector. The fact that they've got a huge chunk of Bitcoin, I think, shows their forward thinking. I think, yeah, I think Square is really interesting, and particularly interesting because there's companies like SpaceX. I would love to be invested in SpaceX, but I don't have a mechanism to do that. And I think that Square is eyeing mechanisms that would allow people like you and me to buy SpaceX stock. So, I think that Square is trying to level the playing field financially and simplify the financial ecosystem top to bottom for everyone. And I think that's a really cool mission. I think that it's a mission that Elon was trying to do with PayPal. Jack Dorsey, I know, looks up to Elon and I know he's talked to Elon about the Square mission. I know Elon has talked about Jack Dorsey running with that mission and seems to be thinking about it positively. So yeah, I think Square is an interesting company in the long run. I think they're going to have to. I think they'll have to figure out how they're going to continue to build their moat against competition. That's going to be their biggest, I think, area of concern. But yeah, Square is definitely the other one that is always kind of like out there and it's appealing to me and it's interesting and I'd like to have a piece of it. But I'm a monogamous man when it comes to my stocks.
Right, and just like SpaceX appeals to you, it's very interesting for me. Love that company. If you could just expand on the company and what they're doing on the forefront of making life multiplanetary.
Yeah, absolutely. So one of the things, and I think this is probably really valuable for your listeners too, is to find a company that has an amazing mission statement that isn't going to change, that will be the driver of the company from day one till whenever in the future. Tesla's mission statement, I think, was written in, I don't know, 2003 or 2008 or something like that, and it hasn't changed. It hasn't adjusted, and it's still the battle cry: transition the world to sustainable energy. Well, SpaceX, kind of the same deal, right? So Elon, same business model. He's like, let's come up with an awesome mission, and that mission is to make life interplanetary and spread the light of consciousness beyond Earth. And I think that's a pretty damn tremendous mission. And SpaceX is doing that. But that's not all SpaceX is doing. And this is what's really interesting about owning Tesla stock is it's kind of like owning optionality on SpaceX because we can't own, SpaceX shares really without some real jumping through some crazy hoops. But owning Tesla is owning an option on all of all of Elon's endeavors. And if you look at so for example, Tesla, it's cornering the market on energy, cornering the market on transportation, and even cornering the market to some degree on artificial intelligence. If you look at SpaceX, it's cornering the market on the space industry and space travel and interplanetary travel, but it's also cornering the market on data. People may be like, what do you mean? Well, Starlink is the system that Elon's launching via SpaceX to create basically ubiquitous internet all around Earth, so that anyone that's got one of their little, satellite pickup hubs, their Starlink hubs, can get internet access, high-speed internet access, pretty much anywhere on the planet. You could be at Point Nemo, the furthest point from land, that's further away from land than the International Space Station, out in the middle of the Pacific Ocean, and still get internet access. The value of having access to the entire database of the world's knowledge via the internet is extremely valuable and important. When you can spread the internet and all of its cultural influences and knowledge influences and all that stuff to the entire globe, and you are the choke point, you own the choke point for all that data, you own something very important. So Elon's trying to corner, he is serendipitously, because of his missions, I think, he's going to own the energy industry, transportation industry, artificial intelligence, data, the whole Neuralink piece, our connection to data and how we coordinate with artificial intelligence, the medical side of things with Neuralink, more transportation with the Boring Company, and mining, manufacturing. He's cornering the market on how we do manufacturing, I think. He's always said the number one thing is the number one value to Tesla isn't the vehicles, the FSD or any other stuff. It's about rate of production and manufacturing. He's basically cornering the market on all of the most valuable commodities of the human race and of existence. He's commoditizing everything and owning and reallocating where those commodities are stored, and then making sure that it's his stamp on those. So yeah, SpaceX is doing some pretty amazing stuff. Wouldn't mind having a piece of that.
Right. Another valuable company that is just sky's the limit, point intended, with that
Yep.
company. And just to wrap things up, the last question I have is basically your philosophy on the value of money, whether it's, the future or where it's going, how people valuable money when it comes to time, cryptocurrency, whatever you want to touch upon.
So when I went through the Naval Postgraduate School, I studied security studies. And one of the things we learned about was economic security, which was a whole field I really had no, understanding about. And we learned about the importance of economic mobility. The ability for someone who is at the lowest echelon socioeconomically to be able to move to the highest echelon socioeconomically in a society is really important. If people don't have the belief that they can do that, then that's where you see societies fall apart. You see, riots happen and just lack of hope in society, and there becomes a battle between the haves and the have-nots, and that's a problem. And economic mobility is absolutely vital for any government to ensure there is at least a certain amount of economic mobility, and the higher the economic mobility, the better. Currently, right now, in our society, because of this pandemic, we're seeing a huge shift in wealth and money. Whether it's the GameStop piece of like, let's get all the money from the hedge funds and eat the rich. Like there's that whole thing going on. But there's also, unfortunately, if you look at the demographics hit hardest by this pandemic, it's the elderly. And, you're looking at this sudden massive increase in people getting, inheritance from people, unfortunately dying because of the pandemic. You're seeing, retirement funds, pension funds that suddenly have all sorts of liabilities coming off of their books. And you're seeing also the government provide cash to people. So there's all of a sudden there's this huge shift of money. And I think a lot of people I think a lot of people think that we're getting in this huge inflationary environment because there's all this money being printed. But I don't know that that's exactly, in fact, the case. Because at the same time that that's happening, there's a deflationary uh, thing that's happening, and that's technological advance. Technology, automation, all that stuff. Those are deflationary, uh, you know, influences, and the rate of technology and innovation and automation is increasing rapidly. So these productivity rates based on like utility of productivity for a single unit of effort is increasing. So those are deflationary uh, powers that are happening at the same time as these inflationary impacts. How that balances out is going to be super, super interesting. But in order for inflation to happen drastically, that money that's being printed has to be being spent. You have to have velocity. In fact, I think Dave Lee had a video with a gentleman, I think his name is Mort or something, on real estate, and he talked about this. It was just like this last week. The rate of money being spent isn't necessarily going up very high because people are saving that money right now and investing that money. So I don't know if there's like a huge inflationary impact that's happening as fast as everyone thinks it is. And where it's happening, I think technology is having kind of a reverse effect by increasing productivity. So, man, it's an interesting aspect of looking at like the value of money and deflation versus inflation. But something that was on that Dave Lee video that was super interesting is the concept of, you know, universal basic income, and about how we might have to transition to that because everything's going to autonomy. And I look at our world right now, and I see how much consternation there is, especially in, you know, our generation and younger people, this seemingly impossible world of wealth that they're never going to be able to attain. The idea that owning a home is just totally unattainable. And looking at what mechanisms we have to defeat that hopelessness that I think is resulting in major fracturing of the social bonds in our country. And it's that economic mobility I touched on at the beginning. I think people don't feel like there's a lot of economic mobility. I think the idea that having zero down loans on houses could be super helpful to a lot of people. They could get into a home, a cheaper home, without having to put any money down. And that would be an opportunity for them to get ahead and get a slice of the increasing value of the real estate market. I think that's a super interesting idea. I think using that as a mechanism to pay off student loans is an interesting idea. But ultimately, you know, there's this whole crypto. This isn't going to be a surprise to you. There's a crypto movement happening. And, you know, I used to own, as I mentioned, I used to own a bunch of Bitcoin. I'm like Stephen Mark Ryan. I used to own a bunch of Bitcoin. I don't have the Bitcoin anymore. It'd be great if I still had it. It'd be worth a ton of money, but I didn't have conviction. I didn't understand crypto well enough. I don't understand crypto well enough now to have conviction enough to hold it through those big dips and valleys. But I think crypto is going to be a piece of that economic mobility. I think it's going to have a role to play in making people feel like, not just making people feel, but giving people opportunity to move from down here to up here. And I think it was inevitable. You know, Elon said that even recently. He said, "Oh, it was inevitable." It was funny because I was thinking the very same thing. I think the shift to crypto and global currencies, you know, a single global kind of digital, the only totally decentralized global currency. I get it. It was inevitable. Part of what gets me excited about Square. But, you know, it's interesting that you asked this question, because when you ask what other company I would be looking at, and I look at this major issue, it's a social issue, of hope and ownership over our country and our world. It's an issue of economic mobility. It comes down to the crypto movement. I think Square. I think Square is solving a lot of these issues and is on the front end of capitalizing on this. But to put to put a fine point on that, I think I think I like science fiction, as I mentioned. Star Trek paints a picture of what's called a proto post scarcity economy, where you get kind of like a UBI, a general stipend to live off of. And then if you work, you can get additional income. The idea that we could be post scarcity is amazing to me. I love this idea that we can have so much autonomy and technological advance that we don't have a need to ever want for the things we absolutely have to have: food, water, shelter. Those things could just be provided because we have so much productivity through autonomy. I love that idea. I think it's kind of utopian, but I don't see why it couldn't be possible, regardless of the physics of entropy. I think that crypto will be a part of our eventual transition to a world where we're in a proto post scarcity and then potentially post scarcity economy, where we can, instead of focusing on manual labor, we can focus on the labor and commodity of creativity as a species. But in the meantime, I'm just excited about getting into the roaring 20s and enjoying all that, because I think it's going to be an exciting decade. And I think the value of money, I think people that are stressing out right now about inflation and the value of money going away, I think is a hyper-inflated concern that I think people shouldn't stress out quite so much about just yet. Long-winded answer.
Nice and detailed, man. It's really going to help people think about money and your analysis and thoughts. So we're going on 2 hours now. Is there anything else that you want to touch upon that we haven't talked about? Any closing remarks at all?
No, I can't believe we went 2 hours. This was awesome. I guess, two quick items. The first is I just want to give a big shout out to the Tesla fam. I've had so much support on Twitter and so much great feedback, and the opportunity to meet so many amazing people like yourself, who, like you said, like I was saying earlier, and I heard you and John talking about, have become the PR team for Tesla in a really cool way. I've learned so much from yourself and people like you and people in our community. I think it's an exciting time to be a Tesla bull right now. And I just want to thank everyone a ton. I want to say congratulations to you on your Model 3 and on your Tesla tequila. I got mine too. I saw you got yours. I'm doing a dry February, but next time we get together, we'll have to do a shot. There you go.
Definitely, man. I just got mine yesterday. I'm really happy.
Nice.
Cheers to you, man.
Yeah, cheers to you and the whole Tesla community. And thanks, Jordan. I appreciate this. I hope we get to do this again. I've got big news coming that I'm not quite ready to share. So when I am, you'll see it on Twitter and we can chat about it next time. Good luck, by the way. Good luck editing all this.
Sounds good, man. I really appreciate your time. You went in depth on so many good points, on high points. It's really going to help. I've learned so much just on this interview myself, so I know other people are going to appreciate it. Again, thank you for your time, man, and we'll definitely need to do this again. And definitely got to meet up one of these times once everything settles, for sure. Thank you, man.
Yeah, man. All right, Jordan. Thank you.
Peace.